All right, welcome to Money Chat Now. I'm your host, Larry Steinhouse, and today is Thursday, September 2nd. Hey, just a reminder, if you like the show, hit that share button right now and share it with someone who will benefit. Come on, hit the like button and let me know you enjoy the show. Of course, leave comments, get involved. I may even talk about you on the air. And don't forget to subscribe to the YouTube channel and like the Money Chat Now page on Facebook. Money Chat Now is brought to you by Investor Schooling. You can attend a complimentary class tonight, this Thursday, or any other Thursday by going to investorschooling.com. On today's show, we're going to be discussing some cool stuff. First of all, we're going to discuss how the Dow is holding in there and the NASDAQ and S&P broke some records. We're going to be talking about private payroll data, disappointing. We're going to be talking about unemployment benefits ending, GameStop stock. We're in the wrong one. Oh my goodness, this is amazing. So I got a teleprompter, and I got to tell you something funny. We're actually in the wrong teleprompter, so I can't even go on with this show right now. This is like so embarrassing. So we're going to have to go to a commercial while I change the teleprompter. Yike! All right, go to a commercial for us.
Hey, if you were listening to Investor Schooling Live today, I'm Phil Falcone, and I made the decision today on air that I'm going to be giving away this car. You want to take a look at it? Let's do it. How would you like to pop your top without ever getting out of the car? Huh? It's pretty cool. You can do it at a red light. You can do it when you see it rainy. You can actually even do it when you're driving, as long as you don't go maybe faster than 10 miles an hour. So I am giving away this car. Why? Is it because I'm crazy? Is it because I'm rich? Is it because of both? Take your pick. I don't care. Let me tell you about the car. We're going to have a contest. We're looking for real estate investors to go to our website and give us a real estate tip. And you can have people that you know vote on the site about which real estate tip is the most quality, most valuable to them. So let's just say that our contest is going to be looking for quality real estate tips and for votes. So you need to get your friends, your family, people who care about you, and real estate investors who are willing to go on the site and vote for it. And I will give you this car.
All right, welcome back to Money Chat Now. Sorry about that, guys. But hey, listen, when you do a live show, anything can happen. So, of course, let's get back to what we're going to be talking about today. We're going to be talking about today's market updates. We're going to be talking about the fact that the Apple App Store changed their policies. We're going to be talking about unemployment claims. We're going to be talking about chip shortages denting automakers. Is it a housing boom or bubble? We're going to be talking about Alibaba stock and China. And, of course, we're going to go through some stock picks. Here we go. Let's talk a little bit about the Dow today and what happened. So the Dow actually closed up pretty high. It actually surprised me. It was up 131 points today. The S&P and NASDAQ both broke records, and that is a surprise. You know, look, one of the things that I'm a little concerned about, and if you guys have noticed this, that the morning starts out really, really well, and then it seems to decline. We get this pop in the morning, and then it declines, and it doesn't come back. So some of the great stocks out there that we all have are sitting there, and they're great in the morning, and they're not making it. Now, they are inching up day to day, which is really what we really want anyway. Whether in stocks or in stock options, we want them to inch up every day. So that's a positive, but it just concerns me that these guys are jumping and moving. You know, they're jumping and moving in the day, so it makes me think that there's a lot of fear out there. It makes me think that the money managers are concerned that they need to take what we would call take their stake and take it now. So that's the only thing that I'm a little concerned with. So keep an eye on that. All right, let's talk about Apple's App Store policy. So I don't know if you guys understood the App Store and how it works. Basically, the App Store, if you put something in the App Store, and let's say you charge $10 for it, for example, you know, Apple would take a big chunk of that, anywhere from 30 to 60%, from what I believe it's as high as that. But they would take this big chunk of it, and then they would give you the rest. So some of the major apps, like, I don't know, like Netflix and Spotify, they all try to say, hey, That's not fair. We want to be able to put in our app. We want to be able to put a link that lets you subscribe to our service without going through the App Store. So you've already applied for the app. You got the app for free. They created the app. You got the app for free. But now they want to be able to sell you a subscription. Let's say to Netflix exactly, or Spotify. So they weren't able to put these links in there to link how to go to another link in the App Store. Well, they fought it in court and they won. And now they can provide a link to an outside web in their apps to sign up for subscriptions, allowing the developers to bypass anywhere from 15 to 30% cut of their gross sales, which is great. So it all started, as I said before, with Spotify. They complained about the rule way back in 2016 when they complained to Apple that Spotify was not the only, and they complained to Apple. And by the way, Spotify was not the only stock in the news today. Most of these stocks that had this option or allowed this option, the stocks now went up. So Netflix, which was also in Apple's new rules, was up about 2%. Match.com was up about a couple of percent, 5%. And also, of course, Bumble was up 4%. So these are all great plays. Anything that has an App Store play might actually be able to make some more money now. Now, I think it's insignificant to the actual earnings of the company, because maybe they're going to get a little bit more money, but at the same time, it's the perception. The perception is everything. So remember, perception is everything. Let's talk a little bit about unemployment claims. And the interesting thing, first-time claims for unemployment insurance total 340,000 for the week ending on August 28th versus a Dow Jones expectations of 345. I hate when this happens. I hate when they sit there and they go, "This is great news." So it's 5,000 less than they expected. It's an estimate. So you have 340,000 versus 345,000. Big deal. But that's the way Wall Street is. They react. It is what it is. But the best part is the number is also the lowest since March 2020 at the beginning of the government overreach crisis. I'm sorry, the COVID crisis. Yeah, all right, okay. By the way, the data came in the day before the August jobs report. So tomorrow the jobs report will be announced, and you need to watch for this. The investors are watching closely to decipher how fast the Federal Reserve will remove its easy monetary policy. Now, this is important. Economics predicts 720,000 jobs were added to the month, down from 943,000 added in July. So they're actually expecting 720, which is great, but they're saying it won't be as much as July. I'm not sure. I actually think it may actually be the opposite, because remember that unemployment is ending soon and maybe a couple of people got to jump on it, but we're going to find out. This could also be the end of the stock market rally. If the job reports comes in too good, it's likely that the market will go down because the Fed will ease off any stimulus policies. Again, this is one of those bizarre things where the Fed sits there and says, hey, there's so many people getting jobs, the economy is getting better, we don't need to stimulate the economy anymore. We've been talking about this for weeks now, and everybody's been talking about this. I think they made the mistake of not raising interest rates a long, long time ago, but hey, that's the way it is. That's what they did, and we're going to have to survive and live with it. But at the same time, the jobs report tomorrow, and it's bizarre because if it's really bad, the stock market will go down. If it's really good, the stock market will go down. So tomorrow, expect a down day if they're extreme sides. If it comes in pretty much average with the numbers that they were expecting, and again, those numbers would be about 720,000, believe it or not, the market will probably be fine. So the interesting part is we really want the economists' predictions to be dead on at 720,000. That would be the best thing for us right now. All right. So everybody's been talking about this chip shortage, and it's really hurting the automakers. And first of all, Ford's August sales of its new vehicles declined by 33.1% from a year earlier in the U.S. due to an ongoing global shortage of semiconductor chips. The Detroit automaker sales capped off a dismal month of U.S. auto sales, which plummeted to an adjusted selling rate of 13.9 vehicles last month. Now, here's the story. That's the worst pace since June 2020 and down from the year's peak of 18.5 million in April, according to the auto data firm Motor Intelligence. Ford also cut the production of their flagship truck, the F-150, and the Mustang E is hard to find. I got to stop here and say, why did they call that thing a Mustang? It drives me nuts. How could they have called that thing a Mustang and ruined it? But whatever, it is what it is. But those two are their hottest selling vehicles right now. The F-150 and the Mustang E are the two hottest selling vehicles, and you can't get them. You know, I drive an F-150, and it's plastered with an Investor Schooling logo all over it, and it's great, it's beautiful, and it's a lease, and my lease is up come July, and I have a funny feeling that's going to be one of those times that I'm going to be really glad to buy that truck or even sell it to somebody else, because it's going to be worth a lot more than my $32,000 residual value, that's for sure. So General Motors also said on Thursday it's adding or extending downtimes at 8 major plants in the US, Canada, and Mexico. Impacted vehicles include GM's full-size and mid-size pickup trucks, Chevy Blazer, GMC Terrain, among others. August is historically one of the higher auto sales months of the year, but the chip shortage has caused vehicle inventory levels to plummet to record lows and pricing of new cars and trucks to skyrocket. I got to tell you something. I sold one of my cars today. I sold a Corvette, my Corvette today. I had it up until today. I had a beautiful Corvette convertible Z06 that I paid $68,000 for used. Today, I sold it for $76,000 3 years after I bought it. So my suggestion is, if you have a car that you want to get rid of, now is the time to get rid of it. I mean, I hardly drive the car, and I'm like, why would I not take more money than I paid for it? So I did. Automakers, including GM, have declined to release new forecasts for how much they expect the parts problem to impact earnings due to the volatility of the situation. They previously forecast billions in losses due to the same problem, but most of which has been offset by record vehicle prices due to the slow supply of autos. So they're now raising the prices of autos because they're so rare, right? There you go. Anytime you have a supply and demand problem, that's what's going to happen. Here's an interesting fact. Dealers only have about 942,000 vehicles in inventory for retail sales, compared with roughly 3 million prior to the coronavirus pandemic 2 years ago. According to analyst division at J.D. Power and Associates. That's amazing to me that they have less than 1/3 the vehicles that they normally would have this time of year. They can't do anything. They can't do it. They just can't get the vehicles. Wow, it absolutely blows my mind. All right, let's talk a little bit about what else is going on here. All right, let's go to a commercial real quick, and we will talk to you guys in a couple of seconds.
Okay, so you've thought about investing in real estate, houses, apartment buildings, properties, but don't really know where to start? Well, what if you could very easily learn how to gain strategies to use other people's money to buy and sell houses in the Philadelphia area? If you could learn and network with successful area real estate investors and how to produce monthly income on rental properties without headaches, that place is Investor Schooling. With Investor Schooling, you'll learn from 2 Philadelphia area rockstar real estate investors, Phil Falcone and Larry Steinhouse, about how to buy and sell properties the easy way and teach you basic and advanced techniques to help you make money in real estate. You can attend Investor Schooling in person or online visual classes 8 times a month. You can and will learn how to make money in real estate. Call for free information and get a complimentary pass to one of these classes. But don't delay, as these complimentary passes are limited. Call the number on your screen now or visit investorschooling.com. investorschooling.com.
All right, welcome back to Money Chat Now. I'm your host, Larry Steinhouse, and today we've been talking a little bit about the market. We've been talking about the fact that the Dow is kind of hanging in there, and the S&P and NASDAQ both hit records. We're also talking a little bit about the Apple App Store policy, and we've been talking about unemployment claims and the fact that the chip shortage has dented automakers. Let's talk a little bit about the next topic, which is all about housing. One of my favorite topics, right? So one of my favorite topics is always housing. I'm a big housing guy. I love housing. Housing actually makes me make money. That's what I do. I buy houses. So what's going on right now with the housing market is the question is whether this is a boom or whether this is a bubble. And we need to decide that. So First of all, you need to understand, let's talk about this, right? During the pandemic, home prices have climbed at a record pace. The median price for an existing home reached over $363,000 in June 2021, which is 23% year-over-year increase. When people say that houses don't go up in value, yeah, they go up in value. They go up really fast. In the last 15 months or so, we've seen a dramatic acceleration in home price growth levels we haven't seen in decades. While speculation is certainly a factor, the main cause for the current housing demand is low mortgage rates, and that's a big thing. At the start of the pandemic in March 2020, the 30-year fixed rate mortgage was 3.45%. By July, this number has dropped to 2.87%. I can't even fathom these numbers. I mean, this is crazy numbers. 2.87% for a mortgage. Wow. You know what? Give me all the money you can at that rate. Supply is also an issue. According to the National Association of Realtors, the U.S. has underbuilt its housing needs by at least 5.5 million units over the past 20 years. That's a stark comparison to the previous housing bubble in 2008 when overbuilding was an issue. So basically what they're saying is, they're saying in 2008, overbuilding was the problem, and they're saying that we don't have an overbuilding problem. I don't know. I'm thinking that maybe it is a problem, maybe it isn't a problem. I mean, I'm not seeing new housing developments go up the way they were in 2008, but I don't necessarily think that the housing problem was the housing problem because of too many houses being built. First of all, those houses still exist, so now we obviously fill those houses, and we obviously need new houses too. I think one of the biggest problems is FOMO. If you ever heard the expression FOMO, fear of missing out, that's what I believe the actual problem is, right? So basically, FOMO, people are, they hear me, I make all kinds of money in real estate deals. I mean, I'm killing it this year. My properties have gone up a ton. I mean, I know, I must have built at least $1 million in equity this year. And everybody else wants to jump on the bandwagon. So that's one of the reasons why housing prices are going up as well. So between more demand and less supply, prices are up. And here's the thing, they're up at the fastest pace since the 1970s. Let's talk quickly about Alibaba and China and what's going on over there. So you guys know I'm in Alibaba and I'm trying to get this stock to go up. Yeah, I keep ordering stuff in Alibaba. No, I'm not. But I think Alibaba is a great stock. The problem is China and their regulations are causing all kinds of problems. China is the latest big company Alibaba is the latest big company in China to express support for the Common Prosperity Campaign driven by President Jinping. The Common Prosperity Campaign. Boy, does this sound familiar. Businesses and individual entrepreneurs are in some cases pledging billions of dollars to good causes, and companies have quickly adopted the popular new slogan, less for the rich, more for the poor, as they seek to stay on the right side of President Jinping's government amid a series of corporate crackdowns. Here's the catchphrase. The push is captured by a catchphrase, common prosperity. Boy, does that sound like communism to me? Holy cow. Now appearing everywhere in China, including public speeches, state-owned media, and schools. Like many Communist Party slogans, details remain vague, but officials and analysts who have tracked the phrase say its use is meant to convey the idea that leaders are returning to the party's original ambition to empower workers and the disadvantaged, and will limit gains of the capitalist class when necessary to address social inequities. I'm going to tell you something I believe in, and this is, you decide what you want to do with this, but I firmly believe in this. A capitalist will be able to survive in a socialist environment. A capitalist will be able to survive in a capitalist environment. A socialist will not be able to survive in a capitalist environment, and a socialist will not be able to survive in a socialist environment. So no matter what environment you're in, become a capitalist. That's going to be my suggestion and my thought for you. Let's talk a little bit about some stocks. Chewy, CHWI, is at a 3-month low. Now, Chewy is a stock, basically, if you understand Chewy, what Chewy does is real simple. Chewy is it's a dog company. I mean, a dog food and pet company, right? So you can order your dog food from Chewy, you can order your dog toys from Chewy, you can order all of these things from Chewy, and you can see it's at a 3-month low. If you take a look at the 3-month chart, you can see it's at a 3-month low, right? So the fact that it's a 3-month low, I believe that makes this a great play. And if you look at it, it's right around 79 today, I believe it is. If you take a look at it, you'll actually see that 77 to me is the perfect buy price. What do you think? You guys think that people are going to stop supporting their pets? They're going to stop ordering from Chewy because they can actually go into the store and order now? No, they're going to get used to it. They're going to like the fact that they were able to order dog food online, and it comes to their house. They don't have to carry it out of their car. Chewy is going to be an ongoing phenomenon, and now the only reason it's down is they had a little bit less because people are going back to stores to pick up their dog food. But you know what? It's not going to stay that way. People are lazy. People also understand the benefit of going online and buying stuff. That's what Amazon's in business for. Remember last week I told you guys to buy Uber? There you go. You still got Uber. You still got time to buy Uber. Now, whether you're buying the stock or the stock option, buy Uber. Uber is a future play. Do you wish you could buy Netflix at 50 or 40? Well, guess what? You are buying Netflix at 40 if you buy Uber right now. Remember DVDs? Remember Netflix DVDs? Real simple. And then when online movies came out, Netflix went to online movies. What do you think is going to happen with driverless cars? 10 years from now, when driverless cars are all over the place, Uber is going to own them all. You're not even going to own a car anymore, and all you're going to do is call a Uber, and Uber's going to come pick you up. They're just going to be following you right everywhere. They're going to follow you everywhere. They're going to be sitting at the end of your street waiting for you. All right, guys, we had a couple of technical difficulties today, and I appreciate you guys hanging in there. But as you guys know, from time to time, I own some of the stocks and some of the options. So I want to talk a little bit about that real quick. Most importantly, I want you guys to know that that the opinions discussed on this show is solely mine, and no one's asked me to discuss them. Thank you for watching Money Chat today. Money Chat Now. Wow. Whew, what a rough day this one was. And most importantly, look, like, share, comment. Let everybody know this show's on. Let everybody know how much fun it is, and let everybody know it's live, and that's why we have technical difficulties. See you tomorrow.